All right, welcome back to the show, Mr. Eric Krown from Krown's Crypto Cave. Thank you so much for coming on the channel.
It's a pleasure to be here as always, man. I always feel like I got kind of my start by doing an interview on this channel a couple three years ago now. Holy moly, man, that is insane. It's always a pleasure to be back here. So good to see you, Mr. Elliott, and good to see the community here as well.
Yeah, thanks for coming on. For those of you who don't know, Krown has been coming, like we first have started collaborating back in 2018. And, I've had the pleasure of seeing Krown's calls, his TA for the last several years. And quite frankly, there's no one who I rely on for TA as much as you do. So I'm super excited to hear what you have to say about this market, which, dare I say, feels a little bit hopeful, a little bit promising.
Yeah, a little bit of hopium here and there, but that's what crypto is all about, isn't it?
Yeah, that's fair enough. Obviously, I've been on wait and see mode, but I'm really curious. What are you seeing in the charts right now?
Yeah, okay. I suppose this would be a good time to go to the charts, and I will share my screen right on over here if I can get my English words out properly. There we go. Let me know if you can see what's going on.
I can indeed. Thank you.
Okay, beautiful. All right, so this is a monthly chart of Bitcoin right here. Very simple chart, just a Bollinger Band on there with a couple of different moving averages. Anyways, the big thing with Bitcoin right now is, of course, we did have this massive run up from about $10,000 to $65,000 unabated, basically no real pullbacks on the higher term timeframes. So what are we doing right now? Well, we're definitely getting our first pullback, and I imagine what the big question is this a pullback before another potential move to the upside, or are we going to be doing the old bear market, the old bear market, going down for the next few years? Anyways, I'm kind of on the same page as you as far as saying that it is wait and see mode as far as the macro situation goes. Do you think that Bitcoin's put in a very nice low right here? Do you think that Bitcoin will rally up probably into the mid $40,000 territory? But ultimately, here's what I really be cautious of. So I'm going to go into this chart over here, actually. I'm going to put it on a 5-day chart, and I'm going to switch around a few things. If we can load this up. Come on. There we go. And let me just adjust this really, really quickly. I need this. I need that. And I need, don't need that one. Okay, there we go. All right, lovely. Okay, so this is what I'm looking at right here. And basically, while I do like Bitcoin having a major base right here, basically off the 5-day cyan moving average, which is just an 89 exponential moving average, just a very classic one, I do think that there are a few causes for concern, or at least for kind of a wait and see if you are in the more long-term sort of minded territory. Anyways, we've seen this set up several times in the past, of which we saw one more recently going back on over here in 2019, actually, where we were basing off the cyan 89 exponential average right here. Classic stuff. After a nice rally, actually about 340% rally from 4,000, 14,000 bucks, and then something nasty happened. Bitcoin broke down. We got a downtrend on the daily and weekly. And what happened after that? We saw the red 10 symbol cross the downside of the yellow 21 exponential average right here. Nothing too complicated about that. It's just a shorter period moving average moving to the downside of a longer period moving average, relatively speaking. So what does that tell you? It tells you that short-term trend is moving to the downside. And what happened after that? We got a nice bounce off the 89, but it bounces into the cross, rejects, comes back down, and base is even lower. We've seen this several times, actually, back on over here too. Bounce off the 89, into the cross, rejection, down, and that one actually eventually base lower as well. We have one other example way back on over here in 2013, 2014, if I can pull it up. There we go, lovely. And it is bouncing off the 89 right here, into the cross, rejection, bull trap essentially, and base is lower. And that's kind of what we have going on right here too. Now, of course, I really want to sidestep that whole, past results is indicative of future behaviors, that sort of stuff. Obviously, at some point, we will see a change of behavior. And we do even see one iteration where this is not true, albeit the setup was a bit different right here. Bitcoin was not based off the 89 in this case. But in this case right here, I do think that it is at least worth, a cautionary sort of tale to be speaking about the mid to deep $40,000 territory right now. And while, like I said, I do think that Bitcoin has a very nice base right here and very likely does rally up into the, at least short $40,000 territory, there are several other points of confluence within that region as well that do cause a little bit of concern. The big one for myself would be this. Whoops, let's maybe go to a different chart. Here we go. This one's nice and fresh. And I'm going to go down to a daily and keep that area in mind, of course. So what I'm going to do right now is I'm going to mark off just a couple of fib retracements right here. I'm going to take a bearish retracement from our high and put it on our current low. And as you can see, where do we see our 618 coming in around, which is your traditional sort of bear trappy-ish area between the 618 and the 0.5. That is your mid to deep $40,000 territory. It's also going to be synonymous with, of course, your CME gap coming in from the same territory as well. Again, right between about 4650 to basically 49,000 bucks here too, which is, you know, not to say that it's 100% guaranteed to reverse right there and go back down to new all-time lows. But my main disposition for Bitcoin right now is that if you are bullish, I actually don't think that there's a humongous rush to get into position right here, because if you are going to be bullish, what it likely is going to look like is something like this. If I throw on my drawing tools, if I go on over here, there we go. Okay, lovely. So you see this red ellipses right here, or circle, or whatever you want to call it, curve. Anyways, I drew this in as kind of like a joke when Bitcoin first got into this region on my channel, like about a month ago, actually, in May 19th, May 20th region, and saying that, look, if Bitcoin is going to put in a low here, which, there's some good probabilities of this area at least acting as a nice base on a daily and weekly, then it's probably going to look something like this. We want to see it spend a lot of time within this region. The more time that it spends there, the better. Just like on your highs, you see that we took about 3 months long to consolidate on this distributed phase right here between late February to basically like early May. We do want to see something relatively similar on the other side. A lot of people have been looking at this as a Wyckoff distribution top. I 100% agree with that. I think that there is no question about it. That certainly is. On this over here, a lot of people calling this Wyckoff accumulation. I don't know if I would necessarily agree with that just yet. I think that there's a lot of things that remain to be seen, but more importantly than that, in the general sort of Wyckoff parlance, you're looking for about the same time spent on your distributive phase as on your accumulative phase as well. And Bitcoin just has this like weird sort of history of taking about 3 months long to consolidate on these macro moves as well. So what that comes down to, or if I want to give a few examples for that, I mean, you can see back on over here in 2018, of course. I don't know how important this is, but 3 months long in this ascending triangle right here, resolved by about 3 months long on this ascending triangle right here. You kind of see that history throughout time if you do go and look for it. Same thing over here, 3 months on the highs, and then it isn't until actually over here on this consolidation phase, a little bit more or a little bit less obvious in that case. But overall, my point is that whether you're bullish or bearish, Bitcoin very likely does rally up from these regions. And if you are bearish, you're probably looking for your short fills higher. And if you're bullish, you're probably just in wait and see mode as well. I don't think that there's anything inherently suggesting that Bitcoin's going to break down from right here. I don't think that there's any real reason to be like bearish, at least from this level, to be quite honest with you as well. I think everyone's kind of looking at the same levels right here, and to just put, 3 monikers of what you should be looking for if this is going to break down. I'd want to see one of 3 things happen. Now, of course, a higher term time frame is going to take the pole position on that. But basically, if we see a 4-hour closure on new lows below these range lows, which would be about 30,300, that would do it for me. A daily closure below about 31,000, that is, not 3,100, or a weekly closure on new lows, which would be about 32,000 bucks as well. If one of those 3 things happens, yep, I would be looking for new lows, all the same targets that everyone else is talking about. Nothing special there, 20,000 bucks, give or take a few. I don't think that that's what's happening right now, or at least for right now. If it is going to happen, it probably takes, I don't know, another couple months or whatever. By the same token, I would not be entertaining the possibility of Bitcoin putting in a macro bottom here until these 3 things happen. So hopefully this is going to be as clear as possible, and stop me if there's anything that's unsure about this. But first and foremost, I need to see something very, very specific to that needs to happen in order for me to entertain the possibility of a macro low being put in here. It would be this, something pretty simple. We got the Hashrates Indicator. Now, this is a public indicator. Anyone can get it on TradingView. Very simple stuff. It's basically to do with like minor capitulation sort of narratives there. I don't think we need to go through the full explanation on it. And it's more like a fundamentally based indicator. Anyways, throughout the history of it, and this is the important part of what you probably want to know, is anytime that we have gotten a blue buy signal, the low on the daily prior to that signal was that next major low before basically blasting off to new highs in that sense. All of the iterations, of which there are 11 except for one. That one iteration was actually back on over here in coronavirus dumb times. So with that said, we can go through just a few iterations on this just to kind of show you what it would look like. But basically, here's your 2018, 2019 lows right here. We got the blue buy signal. It's a terrible timer, by the way, of when to actually buy. Just so you know, if you are using this indicator, it's not good for timing. It's good for a general thesis, which was going to be rounded up by the next 2 points. And it would be this right here. We get the blue buy signal, tells you to buy, somewhere right around here. But my point is that the last major daily low was back on over here at about 3,100. And well, the rest is history because Bitcoin did rally up from that level all the way from 4,000 to 14,000 bucks. Rather impressive. We'll go through one more example as well. We can do one that's a little bit more recent. We can do this one over here, actually. We got another blue buy signal. That was in December 2020 right here. Now, of course, terrible timer, but as you can see, the low prior right here at about 17,000 bucks was the lowest traded until just general continuation here. So overall good. That essentially sets in the conditions. It's not going to be the best timer of things, but it brings up the possibility that perhaps we are looking at a macro low. And we can expect this to have major moves actually too. We can expect this to have like major moves right here, potentially even giving off another blue buy signal, maybe in the next, month or so, as the difficulty adjusts about, I think, every 2 weeks, and we have one coming up in like a few days here. So this will rapidly change, especially due to the situation in China as well. This next point is a lot more easy, and we do not have it as well. And that would be, I want to see at the very least a higher low on the daily. Preferably, I'd want to see like a full-on uptrend on the daily, but we got to start somewhere. And for Bitcoin, the daily trends have been incredibly powerful. They told you to get short over here when Bitcoin essentially put in this lower low and this lower high, confirming it. And over here, do we have anything resembling a higher low? No, not yet. Where could that come above? Anywhere above, well, our current low, which is 31,500-ish region, or just more easily said about 32,000 bucks. Anywhere above there would be good for me, but of course, this is not happening right now. Bitcoin is rallying right here, so what it's probably going to look like is we put in a high first, come back down, scare the shit out of everyone, perhaps put in a higher low, and then the third one.
Let me hop in for 1 second because you've covered some amazing things so far. First of all, the wait and see mode is because even if we're rallying up, you started by saying there's logic for a bull trap here. A bull trap, of course, meaning price action that makes you think we're going bullish again, but really it's a trap just for the bears to squeak out a little bit more profits from the bulls. Now, the second thing is that we have these three very important indicators. First was the Hashrates Indicator.
Yes.
We haven't gotten that blue buy signal yet. Second, we have a higher low on the daily, which we need for an uptrend on the daily. Haven't gotten that one yet, but it does feel as though that one's highly likely, correct? Considering
we probably get something resembling that on this next rally, yes.
Because we're at 36,000 and then we just need to be above 31,000 to get that one.
Yeah, pretty much, yes. And then the third one that's easy to remember is over here. Now, this one's a little bit more of a different indicator, of course, but it is very important, and anyone can benefit from this indicator if you just understand some key, small things. It's a volatility indicator. We are looking at the Bollinger Band with percentile. So if you're familiar with the Bollinger Bands, it's a volatility-based indicator, kind of telling you about the, extremes of price action in a standard deviation format. Now, that's not the best explanation, by the way, but working for now. But then what we did is we had our lovely community member, Mr. Caretaker, put this into a percentile format so that we could do a statistical analysis of it over time. This indicator, by the way, is free as well. All things that we've spoken about here, you can find for yourself, and pretty much everything that we're going to speak about on the stream is freely available out there. So we saw something very interesting here on the current lows at about 30,000 bucks. We saw the BBWP is what I'll refer to this as. We saw it get to 100 percentile on that low. That tells us that we are at extremes, especially on a time frame like this, the daily. And when we get to extremes, what do we expect? We expect a bit of mean reversion in this case. And so obviously this is going to take some time because this was a pretty massive move, of course. And this is why I do think, patience is really the name of the game, as you've been kind of, so eloquently saying, which I totally agree with. But what we want to see now, because that sets in the condition that we could perhaps be looking at a major low, as all major lows and actually major highs in Bitcoin as well have been met with a red read on this 90 percentile or more. If we just want to go back and quickly just show what this could look like, if I can, for whatever reason, my charts are being very slow right here, and this is embarrassing. Anyways, there we go.
So what you're showing here is that this volatility indicator, which is expressed by how big the Bollinger Bands get, essentially, the more volatility, the wider the spread of the Bollinger Bands, which is one of the most popular indicators in technical analysis for those who might not be familiar. All major lows, you're saying, are marked by a red read.
Yes. So if I bring you back on over to coronavirus dump times about a year ago in March 2020, you can see right here, we hit 100 percentile on the dump, as you would expect. And that essentially did mark the low. Bitcoin just works its way up after that. The other example that we can pull up really quickly here, and there are several more, of course, too, but we do want to be cognizant of time here, would be, of course, the 2018 dump from 6,000 to 3,000, of course. Again, getting up, getting up all the way to 100 percentile and then trending all the way down. So we fulfilled that condition. We know that we are at a major pivot point on the market. It is undecided just yet whether this is going to be bullish or bearish. However, what I'd be looking for now is for this to come very low, meaning that we are contracting. We're in a contracting phase, which is essentially consolidation, which is what we're seeing right now. You can see on both this iteration from 2018 and also the coronavirus dump right here, we did eventually come all the way down to the single digits in the BBWP before really flipping around on the macro scale. And well, you can see right here, it gets all the way down to about 5 percentile, I believe. And then there's your breakup from basically 4,000 to 14,000 bucks. Same thing over here, right? Comes all the way down, and then you put in your real base, and well, the rest is history. So what we're doing right now is we're kind of working those really extreme conditions off here. And this is why also I do think if you are going to be bullish and you are like a more long-term investor, which I imagine most of the people on this channel are. Now, if you're a short-term trader, completely different story. By the way, this is a great trading environment right now. It's beautiful. But if you are a long-term investor, you really want to see this come down. The lower, the better. I really want to see in the teens or preferably the single digits before really, saying, okay, we probably have a macro low. And if that is accompanied by a higher low and preferably a higher high as well, on top of the hash ribbon signal, I'm going to be bullish. I'm looking for new highs, over time, probably not the same day. It's going to take time. These markets are generous, but they're not always as generous as we saw in the last 6 months, of course. And now look more or less good. There's a couple more things that I think are relatively easy to remember that I think could be of value to the more long-term people here as well.
Before you go into those, let's just quickly recap. So we have 3 major signals. The hash ribbons, obviously making a 100 read at the most volatile. You want to see those get down to something very low, right?
Yes, very low.
You want to see the blue buy signal. You also want to see the higher trend on the daily. And finally, you want to see the volatility indicator that you just showed as well, correct? So those are the 3 things.
Yes. Yeah, volatility, structure, basically trend, and then the hash ribbon. So fundamental, we have just straight up trend, which is probably the most easy thing and probably the most powerful one too. And then of course, volatility. Those 3 things are pretty damn powerful together. Here's another really easy one to remember. And that would be simply this, the accumulation distribution indicator over here. I think this one's incredibly interesting. I'm going to actually first, before I explain this, I want to bring you over here to the Krown Trading app. This is, again, free as well. We offer up all this quant data as of yesterday. So I'm actually very happy about this. And I want to show you something really quickly here. On that mega dump event from about 60,000 to 30,000 bucks, you can see on our global liquidations, both long and short, there was an astronomical amount of people getting liquidated at those levels, at the $30,000 level. So what can we essentially assume from that information from an underlying market dynamic standpoint? It would essentially imply that the majority of people, or pretty much all the people selling below 40,000 bucks into the $30,000 territory, didn't actually want to sell there. They were forced to sell. Obviously, they were over leveraged. These things do happen. Cascading events are, somewhat common, but we can assume that this is, max sort of extreme conditions, which typically are going to produce a bit of a mean reversion here nonetheless. So I do want to kind of focus on that a little bit just because you expect to see something like that on your major pivots on the market. Yes, you can trade lower, a little bit lower than that as we have as well. But generally speaking, it's a good marker of, starting to look for a big pivot on the macro scale, which we potentially do have. Anyways, I'll bring you back on over here now and explain that within the context of the accumulation distribution indicator. Again, another free indicator on TradingView. Very simple one right here. And all I care about on this one is the monthly chart, the monthly time frame, and the slope of it. So we saw in June, the slope of this remained positive. I don't care about the color on it. It doesn't mean anything. Only the slope. The slope didn't just remain positive. It actually increased its slope to the upside, meaning, more positive slope. So what does that imply? It implies that the prior month was actually accumulated within that region. So those liquidations were accumulated very likely by perhaps stronger hands. What's happening in the next day? We're having the monthly closure, which is also the quarterly closure and the bi-monthly closure. If we see the next tick on this one remain with a positive slope, or especially if it increases its positive curvature here coming into, again, July 1st, you'll know this very, very soon. I would feel pretty damn confident saying that the bull market is still more or less on the long term. Not right now at this exact moment. It's still going to probably take some time to resolve itself. And of course, if Bitcoin does break below 32,000 bucks, hey, price action matters more than anything else. But this has been pretty damn consistent throughout the history of Bitcoin. Anytime that we've seen a slope change on this, we have seen a macro change behavior. And just by the tune of whether it's up or down. If it's up, generally bullish. When it's down, generally bearish. Now, another easy one to remember as well that I just want to throw out there before we move on to the next point would be something very, very simple here as well. You see this blue moving average? That's just a simple, or it's not a simple, but it's an exponential 9 moving average, or 9 exponential moving average, just a backwards way of saying it. For whatever reason, Bitcoin likes to play on this one on its bull markets, like to play below it on its bear markets. Just a very, very simple one. This sort of stuff I'm not as big of a fan of, but it is kind of hard to hate the results here. You can see that it loves to use it on the flip from 2015 all the way to 2018. Same thing over here, same thing over here, same thing more recently over here, even going back all the way to 2012. Tells you to stay long the whole way from about $5 to, well, $1,100. Not bad. So we're going to get a lot of clarity on the situation in just, a little bit more than 24 hours. And keep in mind that on a quarterly close, now I come from traditional markets. So in traditional markets on your quarterly closes, especially your bi-yearly closes, which this will be, a lot of big asset money managers do their portfolio rebalancing. And when they're doing their portfolio rebalancing, a lot of price action usually gets decided around those pivot points, in time. So we can expect that there's going to be some clarity within this market, probably within this next month. And we'll probably see one of those two situations that I laid out, the conditions that I'm looking for general macro continuation in both directions. We're probably going to see that resolve within the next month or two. And, how does that typically work out? I mean, I can't speak for like the people actually, managing their portfolios. I've never done that at like a high level of just been a simple trader. But for these big, asset managers, what do they typically do? They sell their losers, they buy their winners. And, Bitcoin for the last half year has been mostly a winner. So I do think that it would be relevant to say that they're probably going to be a little more on the buy side. But, at the end of the day, again, price action matters most.
Is there a narrative here before we get to the ultimate conclusion, which is, of course, when should we look to buy, if we should? And I know we've talked about that, but we could put a bow on that at the end here. These big asset managers, there's such a narrative around this insane inflation, the absolute amazing adoption of Bitcoin, and the world's most powerful people really just finally kind of clearing the fog and seeing it. You saw Mexico's third richest man a couple of days ago go on this epic rant in the boardroom about how fiat's a scam, how it's disgusting, and how Bitcoin is the only investment he wants to hold for the next 30 years. And I feel like those kinds of realizations from very important people, they're not overnight. It's not a light switch for these people that are the big asset managers. It also feels like a lot of it's happened in the last 6 months, but that doesn't mean that these hedge funds or these asset management funds have pulled the trigger yet. And it does feel like, hey, if this is still an ongoing bull run that will pick back up at the end of the year or whatever, it seems like this would be a time where we might start seeing those people come out and play, right? This would be an interesting moment, a quarterly close, a bi-yearly, a semi-annual close, as you said. And then there's also just this narrative where it exploded so fast in December with Michael Saylor. I don't think a lot of these people had an opportunity to get their hat in the ring yet. So, is it possible, knowing what you know about how traditional asset managers work, that this might be a moment where we start to see that?
It's definitely possible, yes, but I do have to reiterate that is not what I did as my profession. So I can't speak exactly for that people. I can only kind of speculate a little bit. And, it's definitely a possibility, yes. I mean, you have to be realizing that this is a long-term game, of course, for those people. And realistically, when you're looking at the last, mostly year of price action, it's been straight up. Are these people looking to buy up here? No, not really. I mean, they're looking to sell up here, really. They're looking to buy, obviously, a little bit more at a discount, a little bit more in these sort of troughs right here, actually, in my opinion. That makes a little bit more sense because they do have to think from a risk management standpoint. Obviously, like that's a big thing for an asset manager. They shouldn't even be called asset managers. What they are risk managers. And in this case right here, I do think that it would be relevant to say something like that. Yes, but I can't read minds, and I have no clue at the end of the day what they're specifically doing. But I'd imagine that yes, it would be, if there is going to be a time, that's around the sort of time. And of course, the next quarter coming in at the end of September. And then, you got your end of year as well. And that's why actually, typically, if you do look at the charts, you'll see almost all macro pivots come at the end of a quarter. In fact, guess where we hit our top? April. What was April? That was beginning of quarter number 2. When did we hit this area over here? That was January. A little bit of a correction right there before further continuation. What's this over here? September. Oh, that's another end of quarter. Hey, what's this over here? This was your March dump. Well, guess what? Again, end of quarter number 1. So a lot of the time, you almost always see these major pivots, and you can go further back, and pretty much all of them do work out around those end of quarters. So you can't expect that big piece of price action will be resolved around then.
And so what do you say, first of all, fascinating on the end of quarter observations. These markets are obviously now becoming inevitably very much so entwined with traditional markets because the big money bags are here. They are playing, and they do operate on a Monday through Friday quarter end type of schedule. Right. Here. It's still the same old club rules. Now, I said, what do you say to some people who might be feeling the itch? They want to make a move. They don't want to get left behind, right? They don't want to miss the golden entries. What would you say to those people, given what you're seeing, what this means? Hey, look, if this does resolve to the upside and you really are feeling like you need to make that move, what would you say to someone who's feeling antsy, who feels like they really have to do something right now, even though, as you and I both said, we haven't seen enough yet to make a big move?
Yeah. And again, I do want to reiterate, I am short-term, medium-term bullish. I would not be surprised at all to see Bitcoin back around 40,000, 40,500-ish region. 45,000 bucks. And sorry, I did forget to mention another contingency on the other side. Look, if Bitcoin closes a weekly above 50,000 bucks, that's not bearish. It's just simply not bearish. Anyways, okay. So what would I tell someone like that? First off, I can't. The best thing that I can do is lead you to your own conclusions, right? And the way to do that is to first ask yourself, what kind of trader or investor are you? If you're a trader, then maybe you don't care about that at all, and you're just looking to trade ranges. Like, that's what I do, actually. I'm happy to trade all this right here. That's beautiful. This is great. There's plenty of long opportunities, plenty of short opportunities. If you're a long-term investor, and that's your sort of personality, you can be adherent to that, then what do you do? Well, you have to have a plan, right? So whether you're going off of the stuff that I'm saying, or maybe you just pick a few pieces that you might like or might not like, that's completely fine too. And then formulate your own plan with exactly what you're looking for. You always want to have, at the very least, 3 things a part of your plan. That needs to be your entry, that needs to be your risk management, aka where is your invalidation point, where is this idea wrong, not just a random liquidation point, by the way, and then some sort of conditions for profit taking as well. If you can do those 3 things at the very minimum, you at least got a plan, and that you can work off of. Personally speaking, if I was a long-term investor, which I'm not, then what I'd be waiting for is essentially what I spoke about earlier. I want to see a daily uptrend at the very least. I want to see the blue buy signal on the hash ribbons, and I want to see that volatility start to trend lower and lower as Bitcoin sets in a base over the next month and a half to 2 months. We spent about a month and a half here thus far. Remember that the highs, just a few months ago, realistically, we're putting in about 3 to 4 months. So it is relevant to say that this is probably going to take some time. If I had to just kind of do a little bit of crystal ball silliness right now, which, look, I don't put a whole hell of a lot of weight on this. If Bitcoin is going to truly be bullish from here, which I think is still very much undecided, you're probably going to see something like this. You're probably going to see a nice move up, probably into the $40,000 territory, from this area, generally speaking. I mean, Bitcoin's, short-term, medium-term bullish as long as it's above 35,000 bucks. Good short-term pivot there, essentially. Maybe we could pop up to 42, maybe even 45, whatever it ends up being. I would look for that move to get rejected, whether you're bullish or bearish. I think that's a rather easy call, barring any sort of a weekly close above 50,000 bucks. Can I be wrong about that? Of course, yes. But that is not the end of the day. If Bitcoin comes back down here, puts in a greater base over the next month and a half, 2 months, that would really start to look very enticing to someone like myself if I were a long-term investor, which again, I'm not. Again, for the past iterations of a lot of things that we have seen, all of them have turned out to be bearish. So from a technical standpoint, there are several more bearish things and bullish things on the chart right now. So for me, or if I was a long-term investor, I should not be looking for reasons to get in. I should be looking for reasons not to get in right now. There's no need to FOMO. This market is not going anywhere. And of course, you don't need, this is a very funny thing actually about kind of people's perceptions of trading and whatnot. Look, when you go to the store and you see something that's 50% off, you buy it probably because it makes more sense. Like you think you're getting a good deal, and you are, right? You are. What you're not realizing though is in trading, that is the complete opposite of how you should think. What you want to do in trading, if you are a long-term investor, is you want to buy high and sell higher, like, assuming that you're not like, the actual person who moves the markets, which unless you're like an asset manager with, more than $1 billion under your name, probably not. With that in mind, you do have to kind of play the trend and essentially ride the waves of the people who are moving the market. In the same case, you do the same thing on the other side, but I imagine most people are probably not looking to short this. And I don't really think that, it's probably not the best thing to do, especially if you're new as well, because things get really, really nasty on Bitcoin in these downside moves, which are very, very fun to participate in, yes, but when it's going against you, not so fun. So the main message that I want to have is first, backwards engineer. What kind of, are you even a long-term investor to begin with? Maybe you're not. Maybe you're like me. Maybe you're a short-term trader. If so, then that's just not even a topic of conversation. You shouldn't feel left out anyways, because that's not your game. If you are a long-term investor, create a plan. Your plan could, again, be anything, but I'd say at the very least, you need to have those three things: entry, risk management, and some conditions for taking profit set in advance before you take your position. At the end of the day, FOMO, while sometimes the market will be forgiving and let you, make some riches and whatnot, it's not a good sort of mentality to be coming at things for, of course, because at some point, well, the market will turn around, as we've seen more recently, and a lot of paper profits turn into either real losses or they just vanish entirely.
Yeah, I mean, that's really is bang on the money. We talk about profit taking all the time, and when things are on the up and up, everyone, is just waiting for that next leg, that next pump, to see their 5x go to 10x, their 10x go to 20. And it is addicting to see those gains. But, it is just something where if you're not surgical about taking profits at certain points in time, then you're just not going to end up with a big stack for these times, which are, if you're a long-term investor, you want to have that dry powder there. Absolutely. You want to have some cash on the sidelines in stable coins ready to go, because when Bitcoin if it does nuke down lower, it's going to be pretty juicy, right? If I'm a long-term investor and Bitcoin goes down to that 20K range, I'm going to want to buy, right? That's sort of like where you'd say, okay, well, even if this takes a year or two, probably these ranges would be juicy entries long-term.
Absolutely.
That's definitely where I'm at with it as well, which is, hey, look, I want to build a position, but if we go lower, that's where I really want to build my position.
Exactly. And here's another just like very important thing. If you are a more long-term investor, or even as a trader too, you always want to have a simple sort of a general good rule of thumb. I would say at least always have 5% of your portfolio in cash. You want to be in a power position if you do see something that you truly do like. The worst thing that can happen is you're just completely invested, around 50, 60,000 bucks. And then, not only are you not able to take advantage of the next drop down, you're losing money at the same time. So opportunity cost is obviously a thing as well. And, 5% of your portfolio, that's not a whole hell of a lot. I'd even suggest 15%, to be quite honest with you. And realize that you don't need to be balls deep in this thing in order to make a ton of money. This thing moves incredibly, and it is very, very generous if you just let it be, over a long period of time.
Well, I appreciate it, man. You've really opened all of our eyes to the different fundamental indicators that you're looking at to mark a new bullish trend. We have three that are both could be there, but are not there yet. If people want to learn more about trading, obviously, if this is a bear market, I remember in 2018, traders were the only ones really cleaning up. You were the only one making any money in 2018, and you did it so expertly. How can people learn to trade more? I know you have so many resources for people to follow if they're interested in learning more about TA.
Absolutely. I do have a channel of my own, Krown's Crypto Cave, and I do daily live streams pretty early in the morning. I do live in Finland myself, so kind of weird timing, but obviously watch them afterwards. I do upload short videos as well. And I do have plenty of free materials on my YouTube playlist that are 100% free for anyone to check out whenever you want. That'll kind of give you the basics, especially if you're very new. That'll be a good place to start so that you don't actually like pay someone something to learn, stuff that you can just learn on the internet.
Thank you so much for coming on, Krown. Guys, leave your comments in the comment section. Let us know if you want more content like this. And of course, if you want to see Krown talk about other topics, let us know in the comment section below. We're going to try to build out some really cool collaborations here. Once again, thank you so much for coming on, Krown from Krown's Crypto Cave. We hope to have you back very soon.
My pleasure, man. Pleasure to be here. And I salute everyone here.
Take care. Take care, buddy.